So let's talk about the daily setup. Let's talk about the market maker cycle intraday. And let me lay it out with some more or greater detail than I normally do or do in the sales presentation. Okay? All right. Accumulation. The accumulation phase usually occurs late New York and early Asia. The accumulation phase is the beginning of the market maker cycle where he sets the dealer spread and starts to circular trade between the banks. Okay? He will sometimes consolidate near the high, make a big shift, and change the consolidation cycle to be near the low. Here's what I mean. Okay, here's your Asian session, right? The dealer starts, he will accumulate up here. What's happening is he's collecting long holders. Towards the last third or half of the cycle, he will shift down and then start accumulating over here. Okay? This happens quite often. He'll shift the zone in this example away from higher level longs and reissue the consolidation or accumulation phase. Okay? It's your job to understand this and to redraw your box or reissue your box. What the dealer is simply doing, he's trading bank to bank and he's showing something on the chart to make traders bite, induce, or take positions. When enough traders bite, he's ready to make his move by analyzing his book, and he will start the move. The stop hunt, which is a breakout move for traders, it's deemed momentum in the trading community. It's garbage. It's a false move against the dealer's true intentions. It's designed to hit the stops. That's why it's called the stop hunt. It's designed to induce traders to take wrong directional biases. So what happens is he will appear to break out of the Asian range with an aggressive move. He will, in one swipe, break the Asian high in this example or Asian low. Okay? Now, something very cool is that he does it in 3 pumps or pushes, or 3 swipes, if you will. He'll do is he'll extend the high initially. Let's say that this was, I don't know, some odd number, 2802. Okay? So what he'll do is he'll take 2802, the initial high, and extend it immediately in 20 pips to 2822. So it'll be 22 by 25, let's say. He will hold it a second and hit it again. The second hit will be smaller or larger than the first, obviously, but most of the time smaller. It will be another 10 pips, let's say. Okay, so you have push 1, push 2, and then he will see what he's got and then tap it one more time. And I will make the sound effect like ping, he will just hit it. And this might be another 5 pips. Okay, so what do you got? 22 and 10, 32 and 5, about a 37 pip stop hunt. Most stop hunts are 25 to 50 pips. Okay, that's the distance. Why? Where does everybody put their stops? 25 to 50 pips. He will then pull off the level, work it, start the trend. Okay, so stop hunt, false move against your real intention, done in 3 bursts, 3 hits to the high or 3 hits to the low. We call this move vector. The dealer will vector out of the Asian range or vector below the Asian range. Those are vector candles. The trend move, very important. Slow and steady and lasts 6 to 8 hours. It's when the dealer is all in. Now, Steve, how do I tell the difference between the slow and steady and the fast false move? Think about this for a minute. You've been in the business for some time. Have you ever been in a trade going the wrong way and it just seems to bleed you all day long. 6 hours, 8 hours, 10 hours, just drifts against you, comes back a little bit. Drifts against you, comes back a little bit. Drifts against you, come back a little bit. Just a relentless move against your position. That is the true directional move of the dealer. A slow and steady drop or a slow and steady rise. The dealer is all in. He's heavy. And that's when he makes his biggest move. So if you've been in a trade that you saw, like let's say you saw the spike go up and you thought that was a breakout, that was the vector candle. You jumped on long. And then it held the level for a while and chopped, and then all of a sudden it started dropping. The only other quick move in line with the trend is when the dealer makes a shifting of the zone, which I'll cover. The trend move, I can't say it enough times, slow and steady rise or slow and steady correction against the stop hunt. Okay? The dealer will always end the day, and I say always and he won't do it tomorrow, off of the high or low back into consolidation. 25 to 50 pips off of the high or 25 to 50 pips off of the low. A move that leaves traders trapped for tomorrow, makes them pay swap or interest, and jams them up. Okay? So now, with those basics down, let's draw. You have your 5 p.m., depending on the dealer, high-low reset. Okay? Write down these times and stuff, and I'll put a slide up too. You have your high-low reset at 5 p.m. From 5 p.m. to 8 p.m., all times Eastern Standard New York, you have a segment of the market called dead gap. Okay? Dead gap, it means there's no exchanges open. Most traders try to scalp during this time. But here's the deal. As soon as you think the dead gap is dead, the dealer comes in early and moves it during that time. It might be dead for months, and all of a sudden he'll come in and wipe out all the scalping traders. For a couple of days, he'll beat the crap out of them, and then he'll go back to his normal hours. So here's what happens. At 5 p.m., the high and low reset. So you're simply, the high is the spread. The low is 2 pips below whatever the high is, because it's the spread. The dealing spread, not the market maker spread. Okay, so initially for a couple minutes, it's 2 pips. Then here's what happens. The dealer makes a push and pulls back. The pushes will be 15 to 25 pips. Okay? 15 to 25 pips. He will then do the exact opposite on the other side of the spectrum. He will push 15 to 25 pips. An ideal market maker Asian range spread is 50 pips. A 50 pips or less Asian range allows you to see the visible stop hunt. A stop hunt that occurs above or below the Asian blue box on our template. Okay? Now, he will circular trade during the Asian time and build up contracts. At 1 a.m. New York time to 2 a.m., 1 hour, is about the time he will widen the swing. Okay? So here's what's going on. He's doing this, blah, 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 right? It's 1 a.m. to 2 a.m. Okay? These timings I'm giving you are textbook, but they're not. Obviously, the dealer doesn't always follow the textbook. He makes the rules. He doesn't follow them. But as a general rule, this is how the structure is laid out. Okay? So between 1 and 2 a.m., the dealer will open the swing. So he will breach the Asian high and low, both or one. And this is to pick up the traders that at 1 o'clock bracket the Asian range and look for the breakouts. 1 to 2 o'clock is not the true session time, by the way. I'm going to give it to you in a minute. 1 to 2 a.m. is the end of the Asian session. So the dealer widens the swing to pick out the breakout traders. Then sometime between 2 and 3 a.m. he may, or it may go a little later. But here's what happens. Remember I said the trap moves are made at the end of a session, right? End of session or beginning of session. So if I'm coming to the end of the Asian session, I'm going to make possibly the first leg or the vector candles of the stop hunt. Why V3, Steve? Because there's 3 bursts of extending the high or low. Why did the dealers use the number 3 in the business? This is how it was explained to me. People are stubborn in nature. If you see something one time, you may or may not believe it. So the dealer shows you again, and you're like, oh, euro is going up, darn. You'll sit there for a few more minutes, and he will hit it one more time and convince you that euro is going up. So that's why there's 3 levels of rise or fall. There's 3 bursts. The market maker trend lasts 3 days. There's a 333 trade. There's a 33 trade. Because these things are based on the psychological shortcomings of us as humans. These 3s that are buried in the chart are buried everywhere. And once you see them and unlock them, you'll start to notice the pattern even more clearly. Okay? So the dealer extends the Asian initial high in 3 swipes. These are our vector candles. They're called momentum in the regular trading community. They are simply leg 1 of the stop hunt. Okay? He quickly pulls back 25 to 50 pips depending on the pair. The dealer pulls off of the high 25 to 50 pips. Why 25 to 50 pips? Because anybody that had orders in here is stopped out on a 25 to 50 pip pullback. He then repeats the level back towards the high. He may or may not take out the high. In this example, let's say he comes near the high but fails to break it. When he's at the high, the dealer has a weapon. It's called the spread. The dealer opens the spread and grabs the pending orders that are sitting above the first peak. You will see the spread open on your dealer. Not all dealers will show this. But what happens is the spread gets larger. And what's happening in essence is he's holding the level here and working the top side of the range by grabbing the orders with his tool, the spread. Okay? What happens with the spread is essentially looks like this. As you have the bid and ask, right, running parallel to each other. When the dealer gets near the high, he holds this level and opens the spread up here, works it, and then they bring it back together. So you might have a normal 2-pip spread, which will return to normal back here. And in essence, this might open up 7 to 10. So what happens? That gives the dealer a 9 to 12 pip reach outside of the high or low. By opening the spread at the critical points in his cycle, he's able to grab the pendings, trigger the stops above or below the high formation or low formation. Now, if you're a buyer here, okay, and you think it's going to go long, he holds this level here and does not allow you to see a 7 to 10 pip profit. Your trade is -2, +1. You're chopping around in here. He's holding it. But what he's doing in essence is grabbing all the other orders by opening it up with the ask side and not allowing the bids to hit. This is what happens during scalping EAs. It's just variation on the theme, different time of day. So if you're a bid and you bought something and your trade doesn't go into profit, but in order to activate the orders that are here, he widens the spread, picks up what he needs, and then brings it back together or melds it back together at the level it needs to be at. So that, my friends, this slice of action is going on in the M formation and again in the W formation. Okay, so now, the dealer opens the spread and then he shifts the zone away from higher level long holders in this example. Now, this structure that he builds takes 30 to 90 minutes to complete. 30 to 90 minutes. Up to 2 hours. Okay? Up to 2 hours. If the dealer is working the high or low, the high in this example, and he holds it longer than 2 hours, the numbers he was seeking to balance his book have not been met. So he will do one of two things. Continue to hold the level and accumulate, or hit the stops again. Understand the 2 hour time stop is part of this structure, part of this timing. That if you take a position and the dealer doesn't move into profit in 2 hours and he continues to chop, he's probably handling a cross and holding the level. He doesn't have the number that he was ordered to achieve. Like I told you, he comes to his desk and he's told, I need 500 million long holders in Euro. I need 200 million long holders in GBP. Go to work. He flashes price and gives you the appearance of long holding signals or signals that make you want to induce or take a long trade. He then gets to a point where he applies the brakes, works the spread, grabs the money, and corrects against those traders that he just grabbed up. If he extends this level beyond the 2 hour time constraint, his book was not balanced, so he hangs around for more money. It's that simple. Okay? This structure will develop between 2 and 4 a.m. with the gap time being 3 to 3:30 a.m. I'm going to say 3 to 3:30. I know it's getting confusing. Okay? Gap time is a changing of the guard, if you will. Here's an example of what a gap time might be like. There's a dealer working the desk for the Asian session. He's started this pattern. He's made the vector candles, extended the initial high of the day. It turns into 3 o'clock in the morning, 7:30 in London. The new dealer comes in and he goes, what do you got? I got 200 million holding long, about 100 million holding short. I need you to go ahead and hit the stops one more time and go ahead and run trend for your session. All right, have a great day. Thanks, buddy. The gap time is the session changeover communication period for the dealers. From 3 to 3:30 and from 9 to 9:30, the dealers communicate with each other between sessions. The communication allows them to understand what the book is holding at, where they are in the cycle, what part of the structure they've made or haven't made. It's almost like you come to work early and get your workspace cleaned up. You come in, boot your computer, all that stuff. It's a changeover. At 3:30, the London session will start. You might see the second leg come into place from 3:30. 3:45, 4 o'clock, he might make the shifting of the zone. And then he will start his move, so to speak, his trend. The trend move for the dealer, remember I told you, 6 to 8 hours into the U.S. session. But here's what happens. I told you there were 3 pushes towards the stop hunt level. There is also 3 levels within the dealer cycle. the levels are like this. Here's what happens. Level 1, the dealer shifts the zone away from higher level long holders. He will then hit the stops low, hit the stops high, and continue to correct. Level 2. He will then hit the stops low, hit the stops high, or hit the stops high and low, no particular order, and continue to correct. He will then form out the low of the day and pull away from that number, consolidate, continue to collect, and then make a correction against the trend or a rise back into mid-level consolidation. Okay? The trend will run slow and steady with 20 to 25 pip pullbacks, 15 to 25 pip pullbacks actually, to hit the stops in both directions, continue to book a profit, and then he'll be on his way with his next level. Do all three levels always appear? Absolutely not. But on the big trend running days, it will look like three stairs. It will be absolutely perfect. Okay? The dealer will always end the day 25 or 50 pips off of the low or off of the high. The same reason that he did it in this example. Why 25 to 50 pips? The same reason he did it up here. To hit the stops, trap the traders, induce more traders to take, and then hit their stops as well. He will shift the zone away from lower level shorts and go back into consolidation around 1 p.m. Okay, now let me put the timings to this. This is the cycle. There is 3 levels of drop or 3 levels of rise. There are 3 swipes at the high or low on the initial extension. Those are our vector candles. The structure takes 30 to 90 minutes, up to 2 hours to develop. Okay? The 30 minutes are this. There's a candlestick pattern known as a railroad track. It is a 15-minute spike high and a 15-minute correction back into the range. We have to account for that. So we say 30 minutes up to 2 hours. The better structures come when the dealer works the level for a longer period of time. Those are more recognizable. Those are more guaranteed payout trades. Understanding that there's 3 levels of drop, the dealer will go back into consolidation to end the day. And then what happens is, this segment, ending the U.S. session, becomes tomorrow's Asia. So you have your day break, and then this just simply starts over here again. The cycle repeats itself. Okay? So the end, remember how I told you to calculate next possible accumulation zone? Is you take the high minus the low, 100 pips, you find mid-level, and then what happens is, next level accumulation going into Asia will be here. Okay? Now, let me put the timings to it. Let me get a new sheet, and let's do the times together. 5 o'clock, the high and low reset. Still love you, Jerry. I'm just kidding, man. Okay, 5 to 8, dead gap. Dead gap is when no exchange is open. From 8 to 8:30 is the Asian gap time. It's when the Asian market maker gets ready to start his session. Okay? From 8:31 or just 8:30, from 8:30 to 3 a.m. is the Asian session. Okay? We stop our blue box at 1 a.m. I'll talk about that some more, just so you understand. The blue box doesn't go all the way into the Asian session. The dealer circular trades 9 o'clock, 10 o'clock, 1 o'clock, different every day. It's when they have enough volume accumulated to be worth their while to move. Okay? From 3 to 3:30 is the Asian-London gap. Okay? This is gap right in here. It's simply a changing of the guard from the Asian market maker to the London market maker. 3:31 or 3:30, the London session opens and runs till 9 a.m. From 9 to 9:30, you have the London American gap time. The London market maker is talking to the American market maker who's about to come on. Okay? And from 9:30 to 5 p.m. is the U.S. session. And I always joke around about this. I think they eat heavy lasagna for lunch over there. They usually quit. Market will go back into consolidation and end for the day around 1 p.m. Noon to 1 p.m. I think they go for long lunches over there in New York. I don't know what the hell they're doing. All right? So that is the timing of the cycle. Now, there are two candles that identify the Brinks trade during this timing cycle. Those candles, if appear at the appropriate time, are a guaranteed lock on your trade. I know as soon as I guarantee something, you guys are like, yeah, right, buddy. Here's the deal. If you get a spike, hammer, or vector candle that closes at 3:45 and forms the low of the day or high of the day, that sets up a Brinks trade. Here's what I mean. The dealer vectors and pulls back, and he issues a hammer right here. And this comes in at 3:45 in the morning. Okay? This sets up the Brinks trade. The second time that this can occur is at 9:45 in the U.S. session. If the dealer forms the high or the low with the spike, vector, or hammer candle, and maybe sets up first leg of the structure, you're in Brinks territory. This is the first 15 minutes of the session. Remember, false move session beginning. The dealer will form the high or form the low in the first 15 minutes of the session and trade away from there. So he'll end on a hammer, spike, or vector as part of the outside structure at those exact times. If you see this at those exact times, and the other things that I'm going to discuss come into place, it's lights out on that trade. Take it. Okay? With me? All right. So now, to talk about the cycle a little further. Okay, we got the low is formed, the structures work 30 to 90 minutes up to 2 hours. The timings are important. 30 minutes to 2 hours. The 30 minutes accounts for railroad tracks. I like to see second leg formations and structures that last an hour, hour and a half, 2 hours. Those are better structures. Okay, good question. The times that I'm mentioning are summer. The hours we're on right now, summertime. In the winter, London adjusts 1 hour because we're GMT minus 5 in the winter. New York does not change. New York is still 9 to 9:30 because they coincide the stop hunts with the opening of the equity market, and the session coincides with the opening of the equities market at 9:30. So, in essence, London is an hour longer in the winter. Okay, good question. Glad you brought it up. Okay. Yes, right now, Lee, in the summertime, New York is GMT minus 4. In the winter, New York is GMT minus 5. You guys adjust accordingly for where you are in the world. Okay? But New York for London is GMT minus 4 summer, GMT minus 5 winter. And this time will change by 1 hour in the winter. But we're good till, I don't know, when are we good till? October, I think? We're good for a while. These times are correct for now. Okay. Everyone see the cycle, understand. Understand the Brinks trade. That's the shadow box that's on the template. We're going to look at the templates. Okay, I'm going to kill this. Is anybody taking notes off this? We're good, right? Oh, I forgot. Mark the tape. Okay, this is the timing cycle. Okay, so there's obviously variations on the theme. They can't do exactly those times like I show you. It would be too easy to figure out. People would figure it out. So they vary it a little bit. There's 3 of these guys. So what happens is the Asian guy, like he's in charge of accumulation and setting up the first part of the cycle. So he'll accumulate for a month or 2, and then he'll be like, hey, London dude, look, man, I'm tired of accumulating everybody's money. I want to punish once in a while. He's like, all right, here's the deal. You punish, I'll accumulate, and then we'll let the U.S. guy clean it up. So that's how the timings change. They do this to trick you. Just like during dead gap and people scalp, it's calm and quiet for months on end. Then all of a sudden out of nowhere, from 5 to 8, the market is jumping. They're spiking. They're doing all kinds of garbage, right? Well, it's because they've allowed the scalpers to get enough confidence to invite their friends, family, and deposit their life savings into the brokerage accounts. And then they're like, ha-ha, we got them. Now I'm going to come in early and clean it all up. That's what happens. So they change the sessions and times in which the moves will occur. They change the severity of the stop hunts from mild or extended. You might get a 20 pip stop hunt, a 20 pip stop hunt, then you get a 100 pip stop hunt, or a 25 pip stop hunt. They mix it up and change the severity of it. They conceal it behind news and announcements. Was that a stop hunt, Steve? I don't know. It happened the same time non-farm came out. But I swear to God, they made a W in the pound. They just concealed it behind the unemployment news. They concealed it behind Geithner speaking or some other garbage or FOMC meeting. The patterns are still there. They blame geopolitical events. Big correction in Euro. The Eurozone's falling apart. Greece, there's riots. They're tearing buildings down over there. The patterns are still there. They conceal this behavior behind news and world events to keep you confused. So when you lose your money, you go, oh man, that geopolitical news that came out on Greece, man, I got killed in the Euro. Really? No, it was a stop hunt, trap, shift the zone, jam the traders. Nothing's changed. It's just disguised. It's the same story over and over and over, blamed on different political events, different news events, different reasons for accomplishing the same behaviors in the market. When you start to look at the chart, absent of money, and understand what I'm talking about, it's stop hunt, high drop, stop hunt, high drop, correct, rise. Stop hunt, low rise, stop hunt, low rise, correct against the trend, book our money, get on with our day. On every time frame, every session, false move week beginning, false move week ending, week in, week out. Once you understand this, it's lights out. For the dealer, not for you. Okay. I wanted to write the times down because I went a little fast, and I always do. But I wanted to make sure you had these times down. They're very important. Okay? 5 p.m., high and low reset, the market maker spread starts. 5 p.m. to 8 p.m., dead gap. No exchanges are open. Asian session, 8:30 to 3 a.m. 3 to 3:30, gap time. Going into London. London session, 3:30 to 9 a.m. The gap time from 9 to 9:30. The New York session runs 9:30 to 5, and the cycle repeats itself from 5 to 8 with dead gap, so forth and so on. Okay? Write these times down. They're important. Okay. The second most important element of what I'm teaching you is time mapping. You got to map your own broker. If you need help with your brokerage account, you need to contact Kim and Casey at Compass. They'll help you get set up and get started. But the indicators that you load, the times have to match. Now, I know some of you have been here a little while and you're having trouble with your boxes. There is a fix on the way. I don't know if it was released today or not. I know Ray did some of the loading stuff yesterday. But the concept is that you can drag a line to the appropriate time and all the boxes will snap in place. It's been working on. He's getting it there. When it's ready, everyone will have it. You'll be the second to know, because I'll know and then everyone else will know. I'll get it out. Until then, just do the best you can mapping the time. It's important to identify the formations at the appropriate time, because if you take an M in the middle of the afternoon, it's not going to pay out. These moves need to occur at the session beginning, session ends, gap times, in order to be the appropriate setups. Don't get all twisted around with the time ribbon at the bottom of your broker. That's where their server is located. If the dealer has a server at GMT plus 1, then that time ribbon on the bottom is GMT plus 1, has nothing to do with the times that I'm talking about. Okay? All other time references are garbage. Any other clock, any other Auckland's open, New Zealand, all garbage. There's 3 sessions only. I don't care when the New Zealand dealer comes on, no offense to New Zealand. I'm concerned about the 3 major exchanges and how those guys set up the market, move the market, and consolidate the market to beat up the traders. Okay? Alright. I mentioned this, but here it is in words. The 2 most telling candle. 3:30 to 3:45, that 15-minute candle that paints right at the London Open. If that candle forms the high or low of the day and ends on a spike, hammer, vector, this is known as the Brinks trade. We have a shadow box on the template for that for you to see, and I'll look at it in a second. From 9:30 to 9:45, the U.S. open candle or opener, the same exact behavior can be seen on the other side of the spectrum. Okay? If it happens within the shadow box is 1 hour. If it happens within the shadow box, it's still a pretty damn good trade. Okay? Here's what we got. Asian range, initial high, initial low. Sometime between 1 and 3 a.m., the dealer has extended the low in 3 swipes. Here's the low. The dealer swipes it clean in 1 push. He goes into consolidation. He taps it, extended the low, and then he hammers it 1 more time. That's your vector 3 swipes at the low. The dealer hits, holds it, hits, holds it, hits. He has extended the low in 3 moves, about 35 to 40 pips. How the hell can you tell that, Steve? Because the distance from this blue box to this box is 25 pips on the near side and 50 pips on the far side. What did I tell you the stop hunts occurred at? 25 to 50 pips above or below the Asian range. If the dealer hits the stop hunt zone and the shadow box, there's no other simpler way to put it than game over, baby. I got you today. The dealer will extend the low in 3 swipes, 25 to 50 pips below the initial low of the day to form the low of the day. He issues a hammer At 345, that is a Brinks type setup, which coincides with multiple things going on. Okay, Steve, you took it on one bar. How did you know that was a good trade? Here's how I know. Asian range, less than 50 pips. The dealer has consolidated to the low side of the Asian range. Right? Do you see any candles on the top side of this? No. The dealer has reconfigured the consolidation to the downside. Right? What happened here is this. He had some consolidation. He shifted it down, and he moved it over. He snatched higher level longs away, pulled it away from them. We reestablished the consolidation zone coming out of the box. The dealer extends the Asian range in 3 moves. He hits it again, pulls back, comes back above the previous low. Right? The dealer spiked the low and closed back above the previous low. There's an entry. I'm sure TDI had a big fat divergent W on it too. I didn't take the picture of it. Trend runs nicely, hits the high of the day, forms the exact opposite behavior, and goes back into accumulation. Steve, where will the next accumulation zone occur? Let's take the low minus the high, divided by 2, and I will get mid-level consolidation approximate price point. Simple math. So, if you go counter to the dealer cycle, dealer spikes the high, just misses, into the new session, hits the stops again. I take a short position back into mid-range. This could be a good first target, but if you got SpaghettiOs laying there with all the averages, that's a good place where it'll probably come to rest. Okay? All right. We're good. Understand that market makers are limited in what they can do. They cannot wake up and destroy the world. They just can't do it. They'll ruin the economy. They'll ruin trade. They'll ruin the things that keep, I guess, us civilized. I guess there'll be civil unrest. They are restricted on what they're allowed to do. These restrictions are placed on them by the World Bank, the IMF, the powers that be. That is why ADR is a useful tool. They can only move most pairs about 200 pips in a 24-hour period. They can move about 600 to 1,000 pips per week. Understand that they do not have unlimited equity in spite of what you want to believe. They are limited by weekly net change allowance. They are given or granted an amount of net change that they can have. So if you take an example like this one, okay, and I say, are you kidding me? Because they stop hunt high, go down, go back into consolidation, stop hunt low and rise. What's the net change on over 2-day period from March 15th to 16th in the pound dollar? Nothing. There's no net change. Now, if you were long, they beat the shit out of you. And if you were short down here, they beat the crap out of you going the other way, right? If you were trading that, I bet you'd argue that the net change was very painful. But overall, the net change, where the open and close between the 24-hour or 48-hour cycle, nothing's really changed. The price of pound dollar is identical 48 hours later. But if you were riding that circus, you got your butt kicked. Unless, of course, you have my class. So understand that the limitations, they'll make 2 or 3 days of rise and then correct against that trend in level 3 and reverse and end the week with little to no net change. Maybe they'll do that within the day where you see the horseshoe pattern like this, where price comes out, goes down, and comes right back up. Little to no net change. They could do that over a 48-hour period, over a 3-day period, or over a 1-day period. They can't just wake up and say, I'm going to kill everybody today and destroy the world. First of all, it would ruin the business. If you didn't get it right ever, you'd quit too fast and not keep replenishing the market. Their job is to keep you hooked. almost like a junkie or a gambler, I guess. Because you get some right, and you have some moments of brilliance that I call it, where you make a ton of money and then you give it back. That keeps you realizing, man, if I could make 5,000 in a day, if I could just string 4, 5, 6 days together, I'll have a pretty good week. Right? That's why you're here. That's why you keep coming back. But those systems never produce that for you. Well, if the dealers didn't allow you those $5,000 days, and they wiped you out 5 minutes out, the business would not exist. So they have to allow you to get it right. Within that allowance, they have to work within their confines of keeping the global economy somewhat stable. It's not very stable right now. Somewhat stable. So that's how that happens.